Hi, Justin Davies from Emergination here. Today, I want to talk to you about developing a cash flow forecast. Why do you need a cash flow forecast? Well, first off, you need to meet your obligations as an owner. It's your fiduciary duty to make sure that you are solvent and can meet your debts as and when they fall due. It's a great way of knowing how your cash is going to fall. It helps you avoid those nasty cash flow surprises of mystery large bills that might come in. For owners, I find also it's really helpful to help them reduce the worry of knowing where they stand. It's a good way of seeing what's coming to you, but actually really understanding how close you are to break even or to a zero cash position. Knowing that enables you to take action. The next point I think is relevant too is just understand what triggers will require you to take action and when to take action and be able to make those decisions with a clear head ahead of time. Final two are it's great to be able to undertake a sensitivity analysis when making key decisions because you can play with your cash flow forecast, adjust some numbers, see what changes, and then make some decisions about what you might do in terms of new initiatives in your business or changes you might want to make. Finally, businesses that make good cash profits are good businesses. And a good cash flow forecast is a really essential tool to know that you are making a cash flow profit. So let's take a look at an example. So here's an example of a cash flow forecast template. Will be available in the links. So here we can see all the cells that are shaded green. You leave those alone, you don't fill those in, but the balance you adjust accordingly. So we've got an opening cash position in this particular case of $20,000. To that, $5,000 capital contribution has been made, and there was also a recent ATO refund to consider as well. That gives us an opening cash position. From there, we look at our cash in from sales. I keep these relatively simple in terms of product listings. I would urge you to try and keep your cash flow statement as simple as you can. You then see what your total cash in is from sales. Now, don't confuse profit and loss accrual with cash flow. If the money is coming in that month, in this particular case it's July, if the money is in July, that's your cash in from sales. Same with payments. If the money is going out in July, that's your cost of sales payments. And that gives you a gross cash profit. It's not a P&L cash profit, but it gives you an idea on a cash basis how you're tracking month to month. You then look at your operating expenses. I don't go into loads of detail here. I'm trying to capture the most important one here, particularly wages and so on, and seeing where that sits. You then have owners' drawings in terms of the money that the owners take out on top of the wages that they may also receive. Finally, we get down to totals, which gives us the quick analysis of where we're tracking. Opening cash, cash in from sales, cost of sales, operating expenses, owners' drawings, and then a net cash impact there and a closing cash amount. What happens, of course, is at the bottom our closing cash of 36,230 becomes the opening cash for the next month, and so on. The process goes on. So you can see then that you can quite quickly make some adjustments in terms of making changes from one period of time to another and seeing quickly how that affects the respective cells in your cash position. So what does this spreadsheet tell me? Well, one of the things that's interesting in this is that our closing opening cash in July is higher than our closing cash 12 months later. So that means that there might be some issues and some costs that need to be trimmed out of the business. Looking up at the top of the cash flow, we see we've got some loans that are being paid back. So if we take those out, we can use that to work out quickly whether we're in a stronger position at the end of the year than at the start. Another thing that's interesting here is the revenue line is 62,000 and the cost of goods sold is 29, yet the cash position is only 24. What that tells me is that there's not enough cash sitting in this business to make sure that they can meet, things are very, very tight if there's only 24 grand cash left at the end of the month. So I find it a really useful tool to be able to do some scenario planning with a business and work that through. So where do people go wrong with cash flow forecast? There's a few key areas. One, I find that they try to be too accurate with them. Try and get this down to a cent or down to within $100 or so, you don't need to do that. This needs to be reasonably rough and ready and quick. If you do that, you'll use it. You don't want to include too much detail. Again, that makes it just much harder for it to be able to work at where you are. If you know that your operating expenses are around $5,000 to $6,000 a month, or $15,000 to $16,000 a month, just put that in and keep the detail relatively light. Make sure you don't miss anything, but you don't need to go into too much detail. Further, I think that businesses often get confused around cash versus profit and loss in accrual sense. An accrual sense is takes into account payment terms. What you really want to be just looking at is only the cash movement, and same as far as balance sheet is concerned. So if you're buying something that's going on the balance sheet, only think about the cash impact here. Finally, I think that relying on accounting systems to do it for you is a mistake. It's a bit like cash flow in the rearview mirror. You can see what's gone behind you, but you can't see accurately what's coming in front. And finally, the thing I would say is that if you're sitting with a spreadsheet and working through the numbers, the act of forecasting helps engage your mind to the question at hand: how do I maximize positive cash flow in my business? So I hope you find that a useful tool. The template's available for you. If you need any help, please do get in touch, and I'd love to help you grow your business and make it more successful. Thank you.